Hello, everyone. I must welcome you all to our webinar series, Future You, Set Your Career Compass Right with Experts Insight. And I'm Kalyani, your host for today's webinar. So today our topic is Build a Career in Equity Research. In this webinar, you'll find out about a career in equity research. What does it encompass? What is the career progression? Equity research analyst versus investment banking versus venture capital versus corporate finance. What's the key difference in all of these terms? Buy side versus sell side. What are the roles and responsibilities? How an MBA help to jumpstart a career in equity research and more. So, and to answer all these questions, we have our speaker, Saptarshee Chatterjee. He is an equity research analyst at Centrum Portfolio Management. Saptarshee is an alumnus of IIM Indore and has passed CFA Level 3. Prior to his job at Centrum, he worked as an analyst at Edelweiss Financial Services, and he has been in equity research for around 6+ years. And so welcome, Saptarshee Chatterjee, and thank you so much for being here today for this session. So let's start from your career trajectory. Briefly from graduation to MBA, and maybe talking about, how exactly, what was the trigger to become an equity research analyst? So did you decide on finance before an MBA, or was it post MBA? And what was the trigger? So yeah, tell us the career trajectory.
Yeah, so basically I started for electronics and telecommunication engineering in Jadavpur University. During my third year of engineering, I developed a very good interest in stocks. And at that point of time, it was nothing but just having an interest in trading of stocks. And I used to do a virtual trading in investing.com. But but also I had a very good interest in terms of business, because from childhood, there is no one in my family who is deeply involved in business. But from childhood, I have gathered interest in business. And overall, when it turned out in third year of engineering, basically, frankly, I had two options. Either I can go for MTech, or I could go for an MBA, or maybe some kind of other higher studies, or maybe a job. But because I'm having interest in business, I thought MBA could be a good option. When I was studying about a lot of economics and different types of sectors and businesses, I thought that yes, not particularly finance, but business was something of very good interest.
Okay.
Even when I got into personally, I got into IIM Indore, and when I got into there in first 3 months of my MBA, I was perfectly confused between marketing and finance, what to take, what not to take, because I come from an engineering background. From there, whether to go for marketing or finance, it was very perplexing. But so my internship was in marketing, but when I gone into marketing and pure sales role for the internship, that's when I understood that this is not what I really intend to do. It is more like I'm not so much of an extrovert person who may be involved in sales profile or so much of target oriented, but I like to do research on my own, work on my own, and then find out interesting stuff, and then it's very good fun on me.
Okay.
So that is the time I understood that okay, finance is something maybe it is worth pursuing on.
So yeah, so we will talk about the skill sets, because you did talk about the kind of personality and how finance kind of suited you better than marketing. So yeah, we will be talking about that. But how exactly, when did you decide that equity research and not maybe corporate finance or corporate banking? How did you decide that? How exactly equity research happened? Yeah.
I mean, frankly, till second year of MBA, I would say most of us were not sure about the differences between equity research or investment banking or corporate finance. Most of these subjects looked similar until we studied deeply into it and then tried to figure out what these profiles are in workplaces. So yeah, I mean, I had good interest in corporate finance, maybe I would say some level of interest in investment banking. But what really triggered in me is that I'm trying to find something like a treasure hunt. I'm trying to find a hidden treasure in equity market, and there you can make disproportionately good amount of returns, which means good amount of money in one side.
Mm.
Also, it somehow gave me that feeling that you may not be tied to your salary or day-to-day kind of jobs, because you can be autonomous on your own when
Mm.
you are running a show on the equity research profile. Because if
Mm.
you're investing on a business itself, you can do on your own,
Mm.
and that itself can compensate you more than what you are doing on your day-to-day job.
Okay.
But having said that, that's a short-lived kind of an motivation, I would say. But the longer term was the work that I was doing when I was given the assignment of equity research for a company for a subject. That is when I got to know what really work is,
Mm.
and that got me interested. Yes, this is something really worth pursuing for.
Okay. 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 So, okay. Now that we know why exactly, and how exactly, you figured that, you would like to be in equity research. Let's talk about, okay, equity research versus investment banking versus venture capital versus corporate finance. What are the key differences in all these? And maybe, one or two key differences, and if you could just talk about, so that we know and our audience knows that, okay, this is equity research and this is investment
Right.
banking, this is venture capital. Yeah.
Right. Let's do a thought experiment in the sense that, let's say today I'm starting a company, and as we go through the life stages of the company, we'll try to
Hmm.
figure out at what point each of these gate options come in.
Hmm.
So let's say today I start a company, I would need about very good decisions on the finances of the company, where to
Hmm.
put capitals on, where to allocate the capitals, whether
Hmm.
to put on land or buildings or any services, or to bring talent, what kind of way I would choose for allocating the capitals. That is the work of a corporate finance.
Hmm.
So when you are in a corporate finance role for a company, basically you are trying to optimize the ways the company can spend the capital and therefore get the best returns on the capital.
Right.
So
Hmm.
so your day-to-day work would be involving of different projects within the
Hmm.
company,
Hmm.
and you will be finding out what are the costs, what are the profits, what are the ROI of each of these projects, which one
Okay.
is worth pursuing for long term and short term. So that is
Right.
precisely corporate finance.
Hmm.
Now, let's say you have figured out all of these, but you're doing a good business. But what happens is, for most of the businesses to scale up, for let's say 1 to 10, maybe you can scale up with your own capital or capital from the family or something.
Hmm.
But to go from 10 to 100, you would need money from someone else. And
Okay.
at that point of time, generally people like angel investors or private equity or venture capital come in. What they
Okay.
do is they generally take slightly higher risk, but
Hmm.
what they bet on you is the type of businesses, type of sector that you are going into. So
Okay.
they will put money at the very initial stages of the company.
Hmm.
They
Hmm.
have venture capitalists run the funds on a fund structure. So there is a general manager and limited partner, that kind of a structure that they run on.
Okay.
And there, what you do is you invest on a very early stages or maybe medium stages kind of companies.
Okay.
The work related to that is also similar to finding the outlook of the business, of the sector, whether this company will do well or not. But
Hmm.
it's at the early stage. It can be both equity, it can be debt also. So that is
Okay.
venture capital slash
Hmm.
private equity.
Yeah.
Then what happens is, once the company gains a threshold, at least a threshold amount of scale, then the company is ready to
Hmm.
go for an IPO, which
Okay.
means that the company gets listed in the stock exchanges of BSE, NSE, and all of these. And then
Hmm.
once the stocks are listed, or the stocks of the company are listed on an exchange, then it is introduced to a larger audience. And then basically all the funds who invest in the listed equities participate in the company.
Hmm.
There comes the role for an equity research. Most of the equity research associates work on the listed equity space.
Okay.
Once the company gets the threshold, then you know that the company has passed certain amount of miles in their journey.
Hmm.
They are not maybe very big enough, maybe some companies are big enough, but still there are a lot of juice left to be taken from that company, and in a
Hmm.
long term how that company performs. So there
Okay.
comes the role for an equity research, who generally evaluate in similar ways of venture capital or private equity, but on a
Hmm.
slightly later stage.
Okay.
And maybe comparison can be very easily done because we have other peers of the same industry.
Okay.
So in between,
Yeah.
missed. In
Yeah.
between, when you say that okay, the company is ready for an IPO,
Okay.
but then who will run the show? Who will introduce the company to the market? That is the role of an investment banker. What they do is they work on the like book binding. We call it the you must have seen some of these red herring prospectuses. These are the book binding. So some of these investment bankers they introduce the company to the market. It's kind of a deal that they're doing, and based on the
Okay.
amount they are getting from the market, they are compensated. That is one way. Let's
Okay.
say it was one fate that I was discussing of a company of getting listed. Let's say another fate of the company it can be is like the company is getting acquired by another company, or
Okay.
the company wants to acquire a different company, or there is something other like a merger or something like that.
Okay.
Who will run the show? Who will like make these buyer and seller together for these kind of purchase and transactions? These are the job of an investment banking who will get the buyers and the sellers together, get on the business prospects, valuations, and all this.
Okay. Okay. Okay, let's take two questions. Okay, one is somebody would like a few stock tips. Maybe two stock tips you can give, and then yeah, then we can take two more questions. Yeah,
No, so
yeah.
being a SEBI registered
You can't.
research analyst, I
Yeah.
cannot talk about any particular stock
No,
or
not
a
stock.
public media.
Maybe
But
what you can do is maybe how maybe somebody who is starting off in stocks, maybe one or two things that they should probably look at
right.
before. Yeah, so you can talk about it.
So what I can tell you is about see there are multiple platforms like let's say Screener. I'm just taking an example. I'm not promoting any medium, but let's say if we take the platform of Screener.in, there you can find a company in different kind of financials and ratios. What one should look for in a company to invest is first is about the quality of the company in the sense that whether the company's accounting is clean, promoter is good, management is good in terms of integrity and honesty and all those things, and in terms of competent management.
So basically,
Number
do a
two,
lot of research and due diligence
yes. So
before.
what I would
Yeah.
say
Okay.
is maybe someone can think of so the con call transcripts are presented in Screener as well as stock exchanges. There you can
Okay.
read what management is talking about, and a good way maybe is to see promise versus delivery in the sense that if someone is promising X in reality in history, what he or she has delivered. That
Okay.
gives you some kind of integrity of the management. Number
Right.
one. Number two, that is important is in terms of the quality of the business. So one was
Okay.
first was the quality of the management or promoter. The second is quality of the business that we can
Okay.
gauge very simplistically from margins of the business, from return ratios of the business, ROE, return on equity, return on capital employed. These two are the key ratios.
Okay.
Third point I would say is about the growth. Whether the company is growing in history, is having a very good clear strategy, what are the growth drivers, whether the sector is growing, what kind of target market can growth can happen in that sector in itself, and whether in that the company is gaining market share. So
Okay.
basically company has to grow, and one
Okay.
thing you have to understand is let's say if the valuation remain constant,
Okay.
growth is your return. That is the
Okay.
formula. If the valuation remains constant, like a P ratio remains constant, the growth in earnings is your return. So therefore, the better the growth or the higher the growth, the better for you. And the last part is valuation. Valuation can be very tricky to understand, but yes, over a period of time, you'll understand whether valuation is cheap or expensive by
Okay.
comparison.
Okay. So you are in equity research. You are in the buy side, right?
Yes,
Yeah.
right.
So what's the difference between buy side versus sell side, and are the skill sets completely different? And as a in equity research, yeah. So we'll take that, and then we'll take a few more questions. Yeah.
Okay. So I would say that the term buy side or sell side is deeply related to the reports.
Okay.
So someone who is selling the reports is in the sell side.
Okay.
Someone who is buying the reports or buying the information, buying the insights are in the buy side.
Yeah. Okay.
So let's say I'm evaluating a company. Just for example, let's say HDFC Bank. I'm evaluating HDFC Bank. I am whatever information I get to know from the financials, from con calls and everything. I gist it on a report. It can be short or a long report. then and then I try to sell that report, whoever wants to buy it. So I'm on the sell side.
Okay.
Now on the other side, so sell side's job is to basically sell the report, but generally what happens is you do not sell per report or something like that. You give the report as a kind of service. On return, what you want is brokerage, so that people who are buying the reports from you give trades to you and you earn brokerage on that.
Right.
So let's say hypothetically, I give a buy rated report and I publish it, and let's say 100 people buy from it, or 100 people take the report from it.
Okay.
100 people will take, let's say each of them buy one share, so 100 shares will be traded on my platform, and I'll get the brokerage out of it, of these 100 shares.
Okay.
That is how I earn the revenue on the sell side.
Okay.
Compared to that, on the buy side, what happens is generally people who are managing the funds, mostly asset management companies, hedge funds, these are on the buy side.
Okay.
They take or they buy reports, like I said, from multiple brokers, multiple sell side people.
Okay.
And based on their own evaluation also, finally they come to the conclusion whether to invest or not invest, or maybe short to a company.
Okay.
And they are actually allocating the capital, whether like all of us, are maybe some of us, maybe your friends, relatives are putting money in mutual funds or something like that, PMSs. They're the asset managers are putting the money on behalf of you, and therefore they are on the buy side because they are buying the reports.
Correct.
In terms of skill sets, what I would say is that in skill set, so generally
for the buy side and for the sell side, yeah.
For sell side, generally the let's say the assuming the quality of research is similar. Let's say assuming quality of research is similar in buy side, sell side.
Okay.
But generally, because sell side people don't have to invest in a company or don't have to look at multiple sectors, they generally focus on one or two sectors. So they have slightly extra time,
Okay.
which basically means that they generally go slightly deeper into one or two sectors.
Okay.
Which means over a long period of time, most of the sell side senior analysts are having experiences of in the range of 10 to 20 years in the senior analyst position, which means they are knowing that one or two sectors for 20 years. So they know very in detail what kind of things that are going on in that company, in the management and everything. Generally, that is the idea. In terms of work, mostly you can say that 35 to 40% of the time goes towards researching about the company.
Okay.
Similar, 35 to 40% goes, let's say, to talking to the buy side people. Assuming that, let's say I'm a sell side analyst, I have published a report, hypothetically, buy report on HDFC Bank.
Correct.
But I can write certain things only in a 5-page report. I cannot write entire insights that I can have. But someone managing the money on the other side wants to talk to me because he or she wants to have a greater detail about the company. So he'll have a call or a meeting with me. So 35 to 40% of the time goes about convincing those buy side people about the trades.
Okay.
So that's kind of skill sets. Apart from research, you have to also talk to the buy side people, which and slightly convincing power on you on the basis of the merit of the argument. So that's your 80%. Another 20% is generally either on or it's kind of a channel checks or something on the ground kind of research that you do.
Okay.
So this is broadly on the sell side.
Okay.
On the buy side, compared to that, you do not have to talk to multiple people for convincing. What you have to talk to maybe is to your fund manager and your investing committee.
Okay.
Maybe CIO and some other people. So that is investing committee. There you have to pitch your idea and convince whether you are talking about buy or sell.
Okay.
So there these kind of maybe I would say extrovert skills in terms of talking and all is not much needed. That is, I would say 10 to 20% of your time.
Okay.
Now that you have 80% of your time left for these, what happens is most of the buy side people are tracking multiple sectors.
Okay.
Instead of one or two sectors, they track at least 3 to 4 sectors.
Okay.
Which means the people needed on the buy side for covering, let's say, 10 sectors is much lower than people needed on the sell side to cover 10
Yeah.
sectors.
Okay.
And in buy side, again, the final thing about is in both sides, because you're making the decision. Let's say I can write a report today on buy on HDFC Bank, and tomorrow, after 6 months, I can put a sell. Yes, I may have some issue with my investors or something like that, but it's not a very big, or I'm not putting the actual money. But on the buy side, because I am putting the actual money of the investors, I have to be very cautious. I
Okay.
cannot buy today and sell tomorrow or after 6 months or something like that. That's a reputational hazard that you do, which means that you have to be very much decision oriented,
Okay.
which means that uh, one, that you have to have the courage in terms of taking decision whether you should do this or not. You have to be very deeply thoughtful about your decisions. You have to learn from your mistakes on first taking the first step, and then second is having the patience that when the market does not move, your stock does not move, you still have the patience to stick to it. Do not touch it. Do not do much of trades,
Okay.
because much of trades do not help
Okay.
in a good long
Okay.
or long
So,
oriented
so
stocks.
can you just say maybe two soft skills and two hard skills that you must have for equity research, not for buy side or sell side, basically for equity research? Maybe two hard skills. One is, of course, maybe research, do a lot of research and work with a lot of numbers, I'm guessing, right?
Right.
Yeah.
Right.
And maybe another hard skill would be.
So one, I would say, first thing that you have to be very good about is the accounting part.
Okay, accounting. Yeah.
Accounting and
So I'll
numbers.
come to
Both.
CFA after this. Yeah.
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 So in terms of hard skills, these are two. One is that accounting, it's kind of, you have to know every detail how this accounting of these particular item is done. Otherwise, you will be misled. You will not be able to catch the problems in the company.
Okay.
Number two is about the numbers. You should remember your numbers.
Okay.
Because if you don't remember the numbers, then you are not able to compare
Correct.
between different situations of the company, different companies, different sectors. That will be very difficult.
Okay.
Two
Okay.
soft skills that I would say is very simple. Two soft skills that are critical for this profile. One is reading, because most of the time you read a lot of reports and transcripts and many things. So reading is something very much necessary. And second part I would say is thinking. You have to think very deep in like what is really driver for a company.
Okay.
Let's say I'll give an example. Let's say again, talk about HDFC Bank again. I'm not so much fan of these, but I'm saying again, what is the growth driver for this bank? Is it that more people spending money is the driver, or more people taking more loans is the driver, or
Okay.
that way you have to think that whether penetration, whether
Okay.
people buying more cars or credit
So
cards,
basically,
something like
you're talking about critical thinking should be
that.
there.
Yes,
Okay.
yes,
Okay. So, okay. Now, let's talk about certifications. So, how important are certifications in equity research? Now, you have passed CFA level 3. So now, tell us, like, if you are an MBA and you are interested to get into finance and in equity research, and you've not cleared CFA, or you've not taken CFA, or and the other thing is, like, yours, in your case, you have already taken CFA and you've crossed 3 levels. So is how important is CFA for equity research, or for that matter, how important is CFA in finance?
right.
Yeah.
So what I would say is that frankly, CFA, the certification is important. It is really important in the sense that it is kind of a CV selection criteria.
Okay.
Someone who is not having CFA may still get chance to have an interview, but it is slightly unlikely when, let's say, there are 100 candidates and 90 of them are having CFA and 10 of them don't.
Okay.
So it is by nature that those 90 will be preferred over the 10 who don't have. So it's more like a CV selection criteria.
Okay. Okay.
Is it given more importance in terms of actual selection of the candidate? I would say no.
Okay.
Because it is more seen whether So every equity research analyst should have different kind of temperament in terms of reading and thinking, and critical thinking, and all these good knowledge of accounting and numbers. If someone is having with CFA, then the person is preferred, because see, most of them, what happens is most of the people who are applying for equity research as a profile, whether a fresher or non-fresher, most of them have CFA 1 or 2.
Okay.
If not 3, CFA 1 or 2, most of them have. So therefore,
Okay.
it is more like a CV selection criteria for HRs,
Okay.
but for actual interview, it is not so much.
Okay. Okay. There's a question about how an engineer get into finance. So you are an engineer and you got into finance. Yeah. So can you just what are the maybe what his question is that what are the challenges, and is there any I mean, is it a problem in any of the subjects and all that if somebody is from the engineering background and chooses to get into finance?
No, at all. See, think in this way that most of the people, most of the MBAs who are in this field have who have come on equity research profile, and now we know that in India, at least in top tier colleges, 80% of them are engineers. So if I extrapolate that, then 80% of the engineers who have done MBA and then come to equity research are doing that.
Okay.
So one is that MBA is a good option to go for then this profile. But other than that, what one can do is that after their graduation in engineering, then one can think for the opportunities, maybe as an entry level kind of associate kind of opportunities.
Okay.
And there are many today, because there are many quant funds are being launched, and there a lot of programming are being needed, in the sense that those are like automated funds where more it's like a quant based, their engineers are preferred.
Okay.
So
Yeah.
one way is that you may look for the opportunities after your graduation of engineering, of these kind of opportunities in terms of big like entry level. But to really good, then again, either you pursue CFA or something
Right.
like that, or you
Yeah.
go for an
Okay.
MBA,
Yeah. Yeah.
because to be an analyst, you need to have deep understanding about the businesses, and that way.
Right.
That maybe in terms of, and accounting also, and engineers are initially they are not taught about accounting in any way.
Correct. So what are the certifications you can recommend? Most of our attendees are cat takers, and most of them are engineers
Right.
coming from engineering background. So yeah. So what are the kind of certifications apart from CFA that they can probably look at online?
So there are a couple of certifications, like NCFM is one. There you can think about it, or there are multiple other certifications available online. But frankly, if I tell you honestly, these certifications, if you think that the curriculum that is being taught in that certification is of your use, you can learn something new, please go for it, avail that certification. But if you're thinking that that certification will add value to your CV, that is not going to happen.
Okay.
Because apart from CFA, even CFA is also CV selection, but apart from CFA, no other certification is given any value in terms of differentiation.
Okay. Yeah. Yeah. Okay. All right. There's another. Okay. There are a lot of questions about. Obviously, people go for consulting jobs and investment banking. Obviously, because the pay is such that it's extremely glamorous for
Right.
everybody to think.
Right.
So now if you compare that with equity research, now of course you can also talk a little bit about the work-life balance that you have with equity research versus the non-existence of work-life balance in investment banking. But yeah, can you talk a little bit about the kind of perks, the kind of structure that is there usually, after post MBA, of course, after in a placement and all that. Yeah.
So in terms of first on the compensation part, I would say that yes, initially, or at least at some first 5-10 years, the compensation for investment banking as well as consulting would be slightly or majorly higher than what you get paid in equity research.
Right.
It would be similar for corporate finance,
Okay.
and equity research would be very similar. But investment banking and consulting would be a tad higher.
Okay.
But the contrapart to that is because you are developing a skill set where you can invest on a business, it is similar to like you were running a business. You are an owner of the business. So therefore, there are many people in this industry who have made tons of money, which mostly an investment banker or a consulting person cannot make in their own jobs, because
Okay.
that's a job, you're getting the salary or maybe the bonuses,
Hmm.
but the kind of compounding over the years that can happen for business prospect in stocks is
Okay.
much higher.
Okay.
But again, you have to be very good at doing this. Let's say I would say top 20% are very good at doing this.
Okay.
Sorry, what was the second question?
Yeah. So basically, like the kind of perks, salary structures that usually an equity researcher would be expecting, an equity research analyst would expect post MBA. Yeah, we are
Right.
only talking about after MBA. Yeah.
So post MBA, let's
Hmm.
say if you were joining as an associate level, then let's say you can join in a big firm in associate level. You can expect today somewhere between 8 to 15 is something you can expect.
Okay.
If you're joining, maybe if you're good at it, and after that also you're joining as an analyst, or maybe after 2 3 years you're being the analyst, you can expect it to be in the range of 15 to 30. So 15 to 30 is a level for an analyst.
Okay.
Then once you become the senior analyst for a sell side for very good companies, it depends on companies and therefore types of funds and scale of funds. But let's say for decent size of companies, for a senior analyst, it's generally between 30 and 80. Okay. Now this is on the sell side. It can
Okay.
go 1 year plus also, but for some level of analysts only.
Okay.
Then similarly on the buy side for a fund manager, maybe you can expect between 50 to 80 is the range for a fund manager.
Okay.
If I go one level above it, then comes the head of research. Head of
Okay.
research would be somewhere around, let's say, 80 lakhs to 1.5 kind of, or 2 CR kind of in the range.
Okay.
In the similar in the CIO space would be very similar to that.
Okay. Okay. So, yeah, you've almost covered even the career
Just one
progression.
part I forgot to tell you is that in equity research, unlike any other profile in MBAs, the variables are deeply market related.
Okay.
Which means that some years you can get 100% of your fixed as variable or more than that. So you can just double your money in that year. Some years can be very muted. You may
Okay.
not get
Okay.
that much.
Okay. When should the CFA certificate level 1 be done? MBA first year or after that? When did you do it?
So I did post MBA, but I would say that if you have time in MBA and if you have resources to have this course, then I would say that better start it. CFA level 1, better start with it, because what happens is in the if you enroll for the examination, it shows that you're interested for it in the summer placements, which happens just 3 months after you join the MBA.
Okay.
There, most of the finance companies prefer candidates who have at least enrolled for CFA, which means that they are interested in finance, and in the interviews they are asked in the finance questions, and if you do well, it's a good chance that you already get a good summer placements.
Yeah.
Now if you do a good job in the summer placements, you get a very good chance of getting PPO.
Yeah. Okay. Okay.
So that way I would say that yes, it's better to start early than late.
And one also has to prepare a lot for CFA, isn't it? So, I mean, the time given, I mean, do you think, it should be, I mean, a separate time should be given for CFA, or is it okay to go simultaneously with your graduation or with your MBA alongside?
So
Is it possible?
I'd say that generally there are kind of numbers that people talk about. It's, let's say, 300 hours you need to put for a level, level 1, level 2, 300 hours you need to put, which means that, let's say, if you're putting 6 months of effort, it's 180 days. If every day you put 1.5 to 2 hours, it's done, right? That way it's done.
Okay.
So I would say that if you can put 2 hours a day for this, then please go for it whenever at whatever level you are in, and that is the way it should be. Because whether you're in a job or something, you are in graduation, you have to take out these 1.5 to 2 hours for you. Because if you think that you will just have these time for these like 6 months only to study, or 3 4 months only to study these, it's not, it's not recommended.
Okay. 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 Where should one begin in a career in equity research? So how do we start? How does one start even at
In
equity
the sense,
research?
like how to go about it, your
Yeah, no,
is the
as in
question,
where to begin. As in, say somebody is a fresher,
right?
is still deciding on, or maybe preparing for MBA, and is thinking maybe, yes, I do like certain things about equity, and does like market, and does like reading, and is good with numbers. So then where should they begin? What's the
So
best way to begin for a fresher in equity research?
best way is getting the campus placements. It is the best way to
Okay.
begin.
Okay.
Even let's say, assume for a second that you have not got into a campus placements for it, you have gotten a different role,
Okay.
but you want to turn it towards equity research. What you can do is, there are multiple openings within your first year, or 1 or 2 years of your job. Search for other companies where entry level equity research profiles are being offered.
Okay.
At that point of time, please do not think about compensation or something like that in greater detail, because the learning that you will develop would be very, very useful. Because
Okay.
once you get into that platform, firstly, the entry barrier in this field is very high, which means,
Okay.
why I'm trying saying is this, because in this field, the number of companies and people involved in this profile are very limited, and
Okay.
they are deeply connected to each other, which means that we know,
Okay.
actually people know each other in this industry, and therefore
Okay.
not many people are able to enter this field, which
Okay.
means that entry barrier is very high. If that is the case, you should make all the efforts to first enter. Once you enter, and once you have a good level of understanding about sectors and companies, then it's very, very easy to move up the
Okay.
ladder, both in
Okay.
terms of compensation as well as, let's say, designation, or whatever you want to put it that way. Then it becomes very easy. But first, getting into the profile is slightly difficult. So there,
So,
if you find any opportunity,
hmm.
let's say in LinkedIn or something
Hmm.
like that, or
Okay.
your friends or network referrals, wherever you find any entry level opportunities in a maybe small mid-sized companies, just go for it.
Okay.
Learn there and then opt for better opportunity. It will be very easy then. And
Okay, but tell me, how exactly will be that transition? Say, maybe more banks are coming probably, and investment banking firms are coming for placements. Okay,
right,
MBA placements.
right.
So now, so if somebody is interested in equity research, are you saying that, but since the equity research hire recruiters are rare, so are you saying that, maybe, they can get into a bank profile and then maybe move in a 1 year or 2 years or something? How do
Yeah,
you
so
how do you
in the
work on that?
MBA,
Hmm.
in honestly, in the MBA placements, because there are so many candidates, you are
Hmm.
not choosers. It
Yeah.
is a very fierce competition that you
Hmm.
face.
Hmm.
So there, whatever good companies, preferably in finance, because from
Okay.
other fields to
Yeah.
enter in
To
finance is
jump.
very
Yeah.
difficult.
Correct.
But choose whatever is more related to finance, and then more related to equity research.
Okay. And then
Spend
maybe.
there, prepare yourself when you are in
Yeah.
that job. Let's say pick up 1 or 2 sectors, at
Okay.
least one sector or 2 sectors,
Hmm.
and study in detail about the companies in that sector.
Okay.
Now, in the first 1 or 2 years, if you're in a finance related job, if you're
Hmm.
well prepared about sectors and the companies, and then you are preparing for it, and
Right.
hopefully you are having CFA certifications,
Hmm.
is like again a CV selection criteria. If
Hmm.
you're having those, then most probably you will be hired.
Okay. 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 So, you worked as an analyst at Edelweiss, and
Right.
then now you are an equity research analyst with Centrum. So, how different are these two? Your profile, are the other roles and responsibilities different, very different, or they are pretty much similar?
So the roles have developed over time in Edelweiss. It was more like an analysis and valuations, and it was more on the banking and
Okay.
banking only. It's like a BFSI sector, one sector focus. Because I
Okay.
was in the early and I did not have much of the understanding of the sectors and all.
Okay.
Now when I moved to Centrum, and it was an insurance, so it was insurance there.
Okay.
Now it was insurance kind of a fund. Now here in Centrum, it is a PMS structure,
Yeah.
which means that in PMS we are able to find a lot of companies and do deep level of in research in terms of small and mid caps. That is one.
Okay.
So
Okay.
here I am covering multiple other sectors. I am covering banking, consumer, telecom, technology, all kinds of things.
Correct.
Apart from that, because over a period of time, once you pass, let's say, good level of understanding, then people start to give you more responsibilities. So
Okay.
now I have started managing discretionary, a small amount of discretionary portfolios along with that small cases.
Okay.
So these are like a basket of stocks kind of things. So that also have started here. So this kind of evolution that is happening on the profile.
Okay. So yeah, can you talk about, say, can you recommend 3 books which you would say will really help our audience to understand equity research and also figure out different aspects of finance, and maybe choose a career in finance after reading those. Yeah.
Okay. So one is that, let's say, if I assume that if you have already developed interest in finance and equity research, then 3 books I'll recommend. But before that, let's say you are purely confused about finance and all and what to do about things in life, then maybe one good book is Psychology of Money.
Okay. Yeah.
This is a very good book in terms of understanding the priorities and the way we think about money. So that is one.
Correct.
Now, I'm assuming most of the audience in this forum would be MBA candidates or MBAs who would be doing, and they'll be starting their career in some part of time. Let's say for them who have a good, maybe some fair level of understanding or entry level of understanding of equity research, I would say that One Up on Wall Street, that is one good book.
Okay.
So that is one. Number two is Common Stocks, Uncommon Profits.
Okay.
That is number two.
Okay.
I am not naming, let's say, Intelligent Investor or something like that because, see, those books are security analysis. These are very good books, but these are not good for when you are starting to read because these books go in slightly detail and make you think deep. But if you are not prepared for it, then it's of no use.
Okay.
First, let's think about smaller books and basic level of understandings and how to see about companies, then it's better. So there I would say these 2 books are very good.
Can you also talk a little bit about profile building, like maybe 1 or 2 suggestions on profile building? Yeah.
Sorry, profile. I didn't
Profile building. Yeah.
profile building. So yeah, I mean, honestly, if I tell you that it is as per history what you get to see in this field, most of the people who are extraordinarily successful in this field
Okay.
are not from very high academic pedigree.
Okay.
Which means that the skill sets. So what I would say is that so there are different kinds of profile or different kinds of careers. Let's say if I talk about career in really some kind of a scientific research or something, there you need high level of intelligence and that way good level of knowledge and that way.
Okay.
In our field, you don't need a lot of intelligence. So
Okay.
a lot of smart thing or intelligence doesn't count here.
Okay.
The kind of work is really simple. You make a framework of how to choose a good company, you stick to it, you have the discipline to go through it for 1,000 number of companies, you'll excel it.
Okay.
If you have the patience, a very simple thing, if you have the patience to hold a good company in any of these cycles of high or low markets, you will get a good returns.
Okay.
So
Okay.
the kind of skill sets that is required is not of intelligence related. So
Okay.
therefore, profile building and all can get you towards venture capital and all these kind of things. Yes, you will get hired if you have very good profile, but it doesn't relate to how you actually do once you get hired. For the
Okay.
next 30 years, it's about
Yeah.
only the simple skill set, but how diligently you do it.
Okay. So tell me, if somebody has started with a big name, um, does that help in the long run in
Uh,
career? Yeah. In like the first job, maybe, it's a big brand name. So does it help in the long run in equity research?
I'd say that in the first, once he or she changes profile
Hmm.
to and to get into equity research, then it is carrying a good weightage
Hmm.
in the sense that he or she is coming from a good brand or good profile. Then he or she may be preferred over other candidates.
Hmm.
But let's say, does it really add value after 10 years?
Hmm.
I doubt. I
Okay.
really doubt, because in 10 years, you will have much larger track record of your recommendations,
Hmm.
whether your recommendations have worked or not worked. If your recommendations have not worked,
Hmm.
whatever profile you are coming from, a background you are coming from, it doesn't help, because it doesn't help to grow clients' money. And
Hmm.
we all are concerned about money, whether whatever background you are coming from. So it's all
Okay.
about the track record
Okay.
once you enter the field.
Okay. Okay. There's a question about, I know good amount of technical analyst job. I'm not sure if finance is my calling, since I don't know much theory in finance. What is demand for technical analyst in finance? Should I go with finance and get SEBI registration?
So first of all,
Hmm.
SEBI registration to have on your own, yes,
Hmm.
if you like it, then you can go for it, but it doesn't add much value to either in recruitment or anything. It doesn't add much value. You can do it once you are hired in a company, then you can go for it.
Hmm.
Now, in terms of whether technical analysts are required
Hmm.
in finance, so technical analysis is there in every most of these brokerages to
Hmm.
have, but
Hmm.
these
Hmm.
are more for retail clients, not for the institutional clients.
Okay.
Retail clients, in the sense, people who do more of a trading and all.
Hmm.
For them, they also publish reports, and their technical analysis is more used.
Hmm.
But what I would say is, let's say assume that if a company is having 20 analysts for
Okay.
20 sectors,
Hmm.
that company will have one or two max technical analysts.
Okay.
So that way, your in terms of number of profiles or number of job market
Hmm.
is very low.
Is, yeah, very low. Yeah.
So, and number
Hmm.
two is why it is low, because institutions do not only go through technical analysis, because fundamentals are necessary for longer term.
Okay.
So it is better if you're good at technical analysis. Let's say you also develop some bit of skills about
Hmm.
understanding the businesses. If you combine the both, that can be a deadly combination.
Okay. 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 There's one question about, can you talk a little bit about algorithm trading as future? Yeah.
So yeah, so first of all, if you see globally,
Hmm.
index funds and like ETF kind of funds,
Hmm.
all these funds are getting much higher growth rate than uh, manual kind of funds, where like active funds.
Hmm.
I would say that next 10, 20 years, these similar kind of trends will prevail in India. Not maybe in near term 3 to 5 years, but over a
Hmm.
period of time, these kind of trends will prevail,
Okay.
which will also call for algorithmic trading. But the thing is, algorithms are good for short term tradings,
Hmm.
but those algorithms are quant based funds, are globally also quant based funds, apart from the John Simmons funds.
Hmm.
So apart from that, I think most of these quant-based funds have not done well. Why?
Okay.
Because quant-based funds do not think about business potential the way human can think or assume
Hmm.
that way. Because what they do is run algorithms based on the history of different variables in that way.
Okay.
So the way we can imagine about the future, that imagination, we can imagine about something that has not happened.
Hmm.
But
Hmm.
a machine learning language most probably will think in the way the history has happened. That
So that's a pattern that it's, yeah.
in a
Hmm.
trigger events,
Hmm.
let's say
Hmm.
for demon,
Hmm.
for GST, some
Hmm.
kind of COVID
Hmm.
or something like that,
Hmm.
all of these trigger events, in these events, all these quant funds and algorithmic trading breaks down.
Yeah. Okay.
So yes, there is opportunity, and I tend to believe that yes, algorithmic trading and quant based funds will prevail more and more. But still, the larger market will be more on the active investing side, at least for
Okay.
next 5 years in India. Then passives may come, but it will
Okay.
be more related to index based.
Okay, okay, okay. Before we wrap up, can you? Most of our attendees are also taking CAT this year, and which is right around the corner, and also next year. So, do you have a suggestion for them right now? What they should be doing?
So I would say that because cat is very near to you and
Yes.
knocking your door,
Hmm.
don't panic, don't think much about it, don't get anxiety about these. It's a 1 day kind of a test, and it only tracks what kind of preparation you have done over the last couple of months or a year or something like that. It doesn't test your intelligence, it doesn't test how good you can do over a period of time. But yes, let's say what you can do is now, whatever time you have left, think about all the tests you have already done, like all the practice tests, mock tests you have done. Go more on the analysis part, where you are strong, where you are weak. Do more, let's say, practice mocks or something like that on the weaker parts. If you know more on your strengths and your weaknesses, it is very easy to skip a question if it does not fall under your competency. That
Correct.
is very much required. So the thing is, the people who set for the CAT papers, they would want you to spend a lot of time on the questions which are difficult.
Correct.
But you don't have to do that. You can skip those questions and first choose the questions where your competency lies in. So therefore, I would say that for the next couple of days, what you have, please go through the analysis of your past tests that you have already done.
Right. Okay. All right. Okay. That's all we have time for. Thank you, all the attendees, and thank you, Saptarshee Chatterjee, for giving all the insights.
Thank you.